Thank you for watching. This is Richard with Wisdom Investor. And today we're going to talk about how I use the stochastic technical momentum indicator to trade the stock market and ETFs. Okay, I want to thank you for joining us here today. Hope this information here is valuable for you. Leave a comment on what type of technical indicators you use. Do you use the stochastic? Do you like the stochastic? Maybe your experience with the stochastic. It helps others who view our videos. So we're going to get started here. Now we're going to take a look at the Dow Jones Industrials here, ETF. And in this case, this is going to be more of a short-term type trade. Now in general, just to give the big picture here, what I want to do is my core holdings that I use are more long-term. We're going to keep a core holdings, and I use mutual funds for those. The reason I like the mutual funds, they're managed, and they're not a vehicle that you just sell during the day. You have to sell those, and it usually takes place at the end of the day. So I don't want to be able to get trigger happy by having an ETF. You could use ETFs as your core, but I don't want to be trigger happy with those. I want to let those ride as long as possible and let them do their thing, okay, unless we see that the market is reversing direction. And then the next phase is a little bit on the long term also. We use the, say like the XLK technical shares for the S&P 500. We'll use those on a weekly level, but we will use the aggressive leverage funds on those, but we think long term on this, okay? We don't want to get into a day trading situation. So we got our core, maybe 60% in the mutual funds. They are solid. They're going to be our core for us as we build our retirement wealth. And then we can get a little bit more aggressive long term here. We're not going to worry about the day-to-day swing so much unless we get into a major trend to the downside, then we're going to be out. And then lastly, we're going to use some what we call swing trading, and we'll take advantage of the swings on the daily market, okay, on our daily charts here. So this is the Dow Jones Industrials. We're going to take a look at the stochastic indicator and how I use this on a daily basis. Okay, so first thing I want to mention is price is your number one indicator. You always use the price over any other indicator. Volume is pretty much second. There's many times though price will move up and volume's not there, and it can be tricky. And then we can use our technical indicators to help us in making a decision. Let the indicator make the decision and not yourself. Take the pressure off yourself. If something goes wrong, well, you can blame the indicator, okay? Now I'm just joking on that, but typically 70% of the time, maybe 80%, if everything is going in the right direction with the indicators, you're going to do fine. Now occasionally there can be some fake outs, okay? And it can be frustrating when there's a fake out. It looks like it's going up and then 2 days later it reverses. So here we go with the Dow Jones ETF DIA. So we're going to be watching this. I mean, there's just not necessarily one indicator you got your eye on. You may have your eye on multiple indicators. It's like if you go into the hospital, they can't just make the kidney work and the other organs not work and survive. You've got to have all organs working together. Now you go into a hospital, into a emergency room, you're going to see the EKG monitor up there. It's moving in cycles, and that tells you what's going on with that person. It's very much like this. This is the EKG of the stock market. Okay, so here we go. We're moving down in the market here, and of course, you're in this short-term trading, you're out by the time it moves down. This is not a bear market. We don't want to be thinking about using bear funds at this point. We're watching this for a buying opportunity. We're going to be watching candlestick patterns. We're going to be watching a volume, price. So in this case, we start to see the histogram moving higher. That's telling you that this MACD is going to be moving higher. And then, of course, the star of the day here is the stochastic. We're going to be watching the stochastic to get our buy signal. Okay, so our price is moving up. We get a nice little hammer candle right here. We get a couple of nice candles here that are bullish. Even though we get a little pullback, it doesn't test our lows. And so we get a pop-up over our buy-sell line on our moving average. And we see that the stochastic is bouncing above the 50 line. That's where I like to use as the buy-sell line. And so we go ahead and put a buy signal. Even though it gapped up, that next morning we just put a buy signal and we're going to go with it. We got to stop in there. If it doesn't work out, we're going to be out. And we're going to use stops to protect ourselves. Okay, so we go ahead and buy here, and this moves up. I typically use a 2% trailing loss, stop loss on like the DIA here. Okay, so we see our momentum indicators moving higher, our stochastics moving higher. We get off to a pretty good start, bounces back down, but we're still in our range here. We continue on moving higher. We get a little pullback here, but it doesn't hit our stop. I've already looked at this. It would not have hit our stop here. We move up here again. We probably would have got stopped out right here. Okay. So I've calculated this, and this is about a 3% return. Okay. Now I like to use the 3 times funds. So this would be close to an 8 to 9% move here. Okay. That's not bad. If you had $10,000 invested, that's what? A 8%, 9% move. That's almost $800 to $1,000. Okay, in a matter of a few weeks here. If you had invested more, or if it had made a bigger move, of course you would make more. Okay, so again, we were stopped out here. Let's see how our technical indicators, our MACD is still above the 0 line, so we're still positive even though we had a pullback. Stochastic here dropped lower. Then we get a bounce back up. We buy it again. Okay, so we buy again here on this pop up, and again in this particular case we could have a nice ride to the top. We would still be in this case. I'm not in this at this moment of this video, but this would be about another 3% gain. If you use the 3 times fund, it's about a 10% gain. So there's another $1,000 gain here. So now again, if you had 50,000 in there and you had a 10% gain, that's $5,000 profit. Okay, so that's how we use the stochastic here. We use it on a crossover in conjunction with what we see some of our other indicators doing. The key here is our candlestick patterns. That's in price. The price is going to be your number one key in using the stochastic. Let's go over here and look at the QQQ, for example. QQQ, this has been a little bit more choppy in this particular case. Here's a nice run here on the QQQ. Here's a case where we would have, price-wise, we would have been looking at buying that. Let's go down and see what we have with our indicators. We have the momentum indicator moving higher, telling us good. We get a crossover here. So it looks like we could buy this in this particular area here. And that would be, say, around 162, let's say. We could buy that and carry a trailing stop on it. So if we could have had a nice move, say, from 162 to 177, that would be about a 15 point gain. Let's see what that would be on our calculator. Okay, that would be a 9% gain just right there times 3. This could have been a 30% gain. A $10,000 investment could be almost $3,000. A $50,000 investment could be about $15,000. Okay, so we would be stopped out again here, and then we're going to get ready to move higher. Again, look at our stochastic. We know when we see this coming down, we know to get ready. Our momentum indicator stays above 0, so we know we're still in a bullish phase here. So we get another nice move here up in the MAC on the QQQ. Might have bought this, say, around 174. Probably gets stopped out about 178, let's say. So a 4-point gain. Let's see what that would come up with. That's about 2.2. So if we're using the 3 times fund, that's about 6% gain. Still, that's nothing to be upset about. Okay. So these are some ways that we use the stochastic. So again here, we dip down again. We have a lower, we're having higher highs here. We're not breaking below this high. We get another move here, not as good, so we might have broke even on this particular situation. So there can be some situations here, but that's why we use our stops. Put your stop in. Typically, it could be a trailing stop. So it will take you out without thinking about it. I can't tell you how many times I've not wanted to put a stop in because I just didn't feel like I was wrong. I said, this thing's going to go up, and I didn't put a stop, and it just kept on going lower. Eventually, you take a bigger loss. So automate your trading so that you don't have to make as many decisions. Trade like a machine. You know, 90% of the trading nowadays is done by machines with these big banks and these brokerage houses. So you want to be able to trade like a machine. Emotion is so big in the stock market, especially if you had a bad trade. Emotionally, you don't feel like you're down, and you got to get your head straight together. So by using these technical indicators, you can take the pressure off of your own emotions. That's why these stock brokerages use machines. Instead of the traders having to be down because they were wrong, they let the machine just goes on without any emotion involved at all. Let's take a look at another situation here. We're going to look at the IWM small caps. Okay, here's the small caps. Over to the left here, we have our MACD moving lower. We have our stochastic moving lower. So we're saying, okay, we're getting ready here for something. And boom, look at our price. Price takes off to the upside, and the IWM small caps is off to the races. So say around 154, you're probably going to be taken out somewhere here around 165. So we have 11 points, 11-point gain, and it's about 6.7 times 3. That's a 20% gain here. Okay, 20% gain, not bad, not bad. That's better than the bank is paying. And okay, 20%. It took you a month and a half approximately. So 10,000, 20% is a couple $1,000s. I mean, that's not bad. Let's say you're trying to build your retirement portfolio and you need some extra money to put in there, or who knows, maybe you need to pay some bills. Maybe you're already in retirement, but you still need to beef up some of your retirement funds. Or maybe you're a 25-year-old, 20 or 30-year-old just trying to accumulate some money for your house. So these are some nice moves here. Now, it doesn't always work so perfect. Here's a time we probably would have made just a little bit. But again, we let our trailing stop take us out. Let's go down here. So we would have had a buy. Let's go down here. Now, here's something we need to pay attention to. I mentioned earlier the MACD moving higher. Now it's moving lower. And so even though we get a move up here, let's just take a look and see what happened. We can't see the price right now on this, but let's just see what happens. But my guess, this is probably not a good move. Now, again, hindsight wins every time. So here we go. We have our move up higher. Look at this. It's a dud. Okay. But we start to form some strength in the MACD. We push higher. Now, we would have never known that ahead of the fact. Okay. But on this dip here, we see a higher low. And so we get a push up on our stochastic and we get another decent move. Okay. So those are some ways that I use the MACD. Leave your comments on how you use that's how I use the stochastic and the MACD together along with price. Remember, price is always king. So leave comments on how you use the stochastic, or if you think you might start using it. Okay, I want to thank you for watching. Appreciate you watching, and I hope your trading goes well for you.